What's up guys, Brett here. So this is going to be a shorter video. I'm just going to get right to the point for the most part. We're going to be going over basically how to spot longs and shorts on higher time frames, okay? And how to snipe them then on the lower time frames. So I'm going to assume that you guys are basically, you know, at least some basic traders, if not intermediate. If not, check a video in the description below. There's a longer video. It was kind of like a Q&A Zoom session, so you guys can check that out. But I'm going to try to bang this out in like 10 minutes. Don't want to lose your guys' attention, and we want to get right into it, okay? So we're just going to look at NQ. Now, this is what we have drawn out now, but before we have that drawn out, we have to understand what everything is, okay? I'm going to assume you guys know what candlesticks are, etc. If you don't, you know, get a basic guide or go watch some of the other videos on our channel, okay? Let's pull up another chart though before we look at what I already have drawn out, okay? We're gonna pull up NQ on the daily with nothing drawn, okay? We're gonna remove all drawings for right now, okay? So we're gonna zoom out here. What can you guys see? The market goes up, stonks only go up, right? Oh, by the way, shout out Gavin for the hoodie, King, Simba, good looks. You know who you are, Don Hole, and shout out Mama Bear for this cup. Pretty gas. Anyway, so, all right, so we're in a market uptrend here, clearly, right? What do? We basically take a trend line, guys, and we connect the highs. So as soon as we saw this come in right here, we would connect this. We'd extend it out, right? And that's where it would line up, okay? Now, we would have drawn this already, guys, back here, okay? We would have already drawn this, and I have to do it on QQQ, unfortunately, because NQ, you can't use the replay. Same thing though. Take this, right, to here. It's gonna be a little bit different here with QQQ. Okay, so that right there, okay? Now I would have already have drawn this. You guys are probably like, oh, well, you already saw this, you already saw this. No, not really, right? I would have already have drawn this, where? Maybe here to connect here. Otherwise, when we make a new high, I adjust it, right, to there, okay? So now that we have a clear high made, I would draw this line now. And I know that what? If I ever come back up there, that's where I'm gonna look for areas of resistance, okay? I'm gonna go back to NQ just because the chart's much cleaner there. Anyway, so we know that, right? And then we see that it comes back into play here. Now, what do we have on the bottom? This is called, by the way, a channel, okay? So this is a channel, okay, guys? Basically what a channel is what? It's a channeling, you know, channeling energy or channeling, you know, the candlesticks in this case, upwards, okay? Could be an upwards channel, could be a downwards channel, either or. This is the daily chart. This is since September of 2020, okay? Came up, huge fucking push. Then we had that huge drop at the end of 2020, right? Excuse me, in September. We had a little bit of a bounce in October, a dump again, a bounce, a dump again, and then a higher low here for a continuation up, okay? So we have this channel here, right? So we're looking for longs at these levels and shorts at these levels. So this is one way to trade. You go on the daily, you wait for these levels to come into play. It doesn't mean you can't day trade, right? You can day trade in between all of this, right? Everywhere. But when you're looking for longer time frame plays, you want to use the daily chart, okay? You can look on the smaller time frames, and when you see a nice daily candle off of this level, so for instance, guys, right here, this first one right here, this is a reversal candle, right? Right at the lows. A simple trade, right? When you hit this bottom, right? And maybe you didn't do this one. We can even go to this one if we want. But let's use this one here, right? Is this. The day closed here. We enter longs. We simply place our stop loss right below this wick. If we close below here, we're out of the trade. What is our target? Our target's going to be at least half this move up, right? We want to at least get somewhere back to these highs. So our target really would be about, you know, here. 4-to-1 trade, right? So for every one of these that you win, you could lose 4 and still break even. Make sense? What does the target end up really hitting? 8-to-1. Okay? Now with options, this is gonna suck. You're gonna take a much bigger loss sometimes if you're playing options, especially if they're weeklies or if they're you know, next week, etc. So if you're taking options, this is why it's very important and very very critical, really, to hold some of these swings, because you need, if you're trading like this, you're gonna need to capture that whole move or at least half of it and get, you know, that 200, 300, 400% rather than just 100. Because why? If you keep losing, you're not going to have that R to R, right? You could lose this 2-3 times And then if you win that one and you trimmed it early or you closed it early, you're gonna be shit out of luck, okay? Same thing here, right? Could have taken an entry on any of these candles with a stop below the wick. Even if you took it here, your stop's still below this wick, right? It never hit here. Same exact thing. Same thing here, right? Never came below this wick. Same thing here, right? Here we go again. Here, same thing, guys. And usually you want to look for a bullish candle, but so you know, I might have probably entered here, right? I would have entered on this daily close right here. And my stop loss is still right below here. What am I targeting? Right here, that recent high, if not all-time high, right? 3-to-1 trade. Even down here, it's still a 2.5-to-1 trade, okay? Boom. So that's just technicals. Same thing with shorts, okay? You probably would have gotten stopped out on this short if you played it here or here, but there was no reason to take a short until this candle, right? This was the candle to short because it was an inverted, right? Almost an inverted hammer. Closed a little bit shy of that, but you know, still a good candle to short here. Here, I think we were still long, and you know, you didn't have that big pullback. You made a higher low right here. You made a higher low than it made down here, right? You didn't come down here yet. So it looked like we'd have a break to the upside. Then we got that Omicron news, right? I think it was like 2 weeks ago or 3 weeks ago. And then we saw this big sell-off. Now, why did everything bounce here? Well, guys, you have to take these levels, right? This is the previous all-time high. Lines up right here perfectly. Everybody get that? So that's what you want to look for, okay? You want to look for these key levels, previous all-time highs, etc., to enter for swings, how to catch tops and bottoms, okay? Now, how do we know that the market would reject right here? Well, guys, we're going to use what we call a fib pull. Now, you guys can look this up, but basically what I'm doing is I'm taking from the high down to this low, okay? This is clearly the low. And when would I do this, guys? I would do this on the first day that we have a bounce back up, okay? So that would be right here or right here. I'd be able to draw this. Now, what do you see? Basically, what we're doing here is we're taking an entire range, okay? I'm not gonna explain it in detail, but basically, we're taking this entire range. This is 100% in this range, okay? This is all we're playing, 100% of this range, okay? We're basically saying that from the bottom back up to here, okay, that's 70% of this move, right? 70% of the move. So this, from here to here, 707, it's 70.7% of this entire thing, okay? Now, why is that important? Well, this is what most institutions and hedge funds use when they're either buying the dip or selling rips, okay? If it's going to be a lower high, right? A lower high or a higher low, okay? So I'm going to show you guys how it works and how to use it to your advantage. So this is a GP, right? So this is a GP short. So what I had a video and I posted in a bunch of our groups our path of what we could see from here. And I drew this out the other day. Basically what we were looking for. We saw a big bounce here, right? Big bounce. Why did we see a bounce here, guys? This has nothing to do with the golden pocket here right now. But we saw a bounce here because this was what? The previous all-time high, okay? We had 2 wicks to the downside. We never closed below that wick. This yellow line also is the 50-day moving average. Very, very, very good indicator to have on 200-day and the 50-day for looking for daily levels to buy or sell, depending on where the price action is. In this case, what do we see? Bounces off the 50-day, right? So that's bullish. Anyway, we see the bounce here, right? We break up. Now, guys, when we're going back for this all-time high, right? When we're trying to make it back to here, where are we gonna find some resistance? Look where the price sat. Here, 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 broke above here, broke down, here, 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 right? Same level here. So this is going to be an area of interest. We don't even have to have the golden pocket drawn out, right? It's not even there right now. But we know that when we get up here, we'll have resistance. Now, let's draw it out again. Golden pockets here. Now, this is typically a bullish candle, okay? This is typically going to be a bullish candle here. It looks like we're, you know, gonna be pushing. We held the highs here, but we didn't quite break over. So is this a good spot to take shorts? No, we'd have to look on the smaller time frame, right? Or we could take a little bit of a, it would be a little bit of a gamble taking a short here, but it's a good short to take, right? Because we are at the short GP. We know that what? The same exact way, guys, the same exact way that we stop out above the wicks, below the wicks, we're gonna do it above, right? So let's give this one a little bit of room, you know, right there. Let's say we took the trade here. We could have even taken the trade here. It's the same thing. Now we are shorting. We want it to go down, right? This is our stop. We're looking to capture at least half of this move, okay? Half of this move right here, from here to here, okay? What is the trade, guys? 7 to 1. What is the trade all the way down here, guys? 12 to 1. You guys understand? So this is how you're able to get these low risk, high reward plays, okay? It might be a higher risk in the sense of when you get stopped out, right? Because you might get stopped. It doesn't always work out like this. You might get stopped 1, 2, 3, 4 times even, right? But when you get it right, you're gonna capture a large percent gain, okay? You're gonna capture a huge move compared to what you stopped out at. So it's okay to lose a lot as traders. You could have a 30% win rate and still be profitable for all we care, right? It's all about your profitability, your profit factor. So now, how did we know that we would short to here? Can you guys guess? Well, remember how we pulled it from the high to the low? Now we're gonna do it from the low to this high. Boom. Okay, so now we're using this range, right? It's our new low to recent high, okay? Now, what do we see, guys? In this golden pocket, again, now we have what? Our 50-day moving average curled up a bit, right? So now it's a little bit higher. What also do we see here? The golden pocket, right? Right at the 70% retracement area. Golden pockets anywhere from the 618 to the 786. Usually the 786 is a bit pushing it these days. But what do we see? We see strong price action, bullish price action, right? Right off that level, right? Matching hammers here, matching candles here, right? Matching bars. Reversal candle here, and then we have the huge move up on the Fed today. So we shorted this. If you guys remember, I was posting a bunch of shorts. I posted it everywhere in the group, social media, etc. We shorted this whole move and we took profit right here. Because why, guys? I didn't think, number one, that we were gonna break the 50-day, but not only that, I didn't think we would break this right away, right? Our expected path would be what? Literally to see some type of move like this. We want to see a dip. Oh, let's go back to the daily. We want to see a dip from the highs, right? Back to here, to the golden pocket, right? And then here's where the decision is made. Right here is where you'll usually have the decision made, okay? This decision at this point, and you know, clearly today it was bullish, so we broke through. This is where you have to go on the smaller time frames and see if you're going to get this. A further move down, right? And then a sell off to the trend line, right? The bigger trend line. Or in this case, what we had today is what, guys? Just an explosion and a rip upwards. So now what might we see? Now we might see this, right? Maybe a dip for a higher low here and then a breakout to the upside. Maybe we'll just rip towards the upside. Either way can work. But what do we know now? Now we know what? That there isn't really any good trade to be in unless you longed right there, right here, right? Or shorted up here. Now we're gonna be retesting this level with a very bullish candle, a lot of volume, okay? So really, I'm not really looking at shorts. I'll see if there's gonna be a rejection here, but realistically, what do we want now, guys? We wanna see a close above what? This level here, right here, okay? So that's what we're looking at. Oops. Okay. So hopefully this taught you guys, you know, how to spot things on the daily chart. All right. Let's look real quick. Individual stocks. How do they react at these levels? Okay. Shop. This is Shopify, my favorite fucking stock. You guys know it. What do we have here? The levels that I'll draw out all the levels that I'd be looking at as of, you know, just looking at the chart without even anything, right? I'd be looking, areas of interest would be here. Here. Oops. Here, right? Here. Here. Here, obviously, all-time highs. And, you know, down here, right? And here. Okay, so I'm just simply taking peaks and lows that I see throughout the chart, okay? Now, clearly, these aren't gonna come into play right now, you know, unless we did a major dip, so I'm gonna delete these for now, okay? What are we left with? We're left with these levels, okay? So these levels, why did the price bounce here? Why did the price bounce right here? Well, let's see. We had a big run up. What was the last low before this? Basically here, right? Maybe even here. So if we take a fib, let's take a fib of the this is a more of a key level, right, than this was. So let's take a fib pull from here to the high that we had here, okay? What do we have? Right here we have about the 50% retracement. Now this is another good level to put on your charts, guys, on your fib pulls, okay? This is gonna be from low to high. We wanna look for a dip buy. Why did the price bounce here? Well, we were right around that 50% retracement. This isn't going to be the best example for a fib pull, and I wanna show you guys that it's not always going to work out perfectly, right? But why was this a good entry? Well, what else did we have? We had a retest of this high, right? This area that we had marked out. Also, what did we have here, guys? This is the 200-day moving average, this red line. So what did we have? We have a reversal candle showing a strong wick to the downside right at the 200-day. This is gonna be your strongest indicator. Let's get rid of the GP for right now. Same thing, let's say we took a long here right at the 200, right? We take this right towards the end of the day when we see that the candle's closing like this. Our stop loss is simply right below here. What are we looking to do? Capture half of this move, at least. That's what we always say, right? So half of this move, it's a 4.2 here, right? So what does that mean? Half of it will be 2.1. Okay? And it does end up going all the way up to that 4. Now, what do we see? We're back at this level again, guys. We're right back at this level. And if you switch to the smaller time frames, you'll see what happens. I haven't moved anything, guys. This box, this green box right here is from the daily chart, okay? We had strong buying pressure right at this level. So I literally signaled right here today to buy at 1300, right? I said we're going in, shop, $1,300 calls here. And what did we get following that? A 4% move in an hour, okay? Even if we lost this whole contract, and you shouldn't have lost the whole contract, right? Because we would be using a stop loss below this wick. It is still a good trade to take, right? If you're managing your risk. For every 4 of these trades you take, right, you only need to win 1 just to break even. What if we win 2 in a row? You're up huge. 3 in a row, massive. 4, rich, right? So this is how you guys should be playing all of these levels. This is how you guys should be looking at charts, okay? You always want to start on the daily and then look for strong buying pressure or selling pressure on the lower time frames, okay? Also on the weekly chart, why I fucking loved this, look at the weekly. To the T. Okay? Golden pocket to the wick. That's it. It's as simple as that. It's really as simple as that. I don't think I should make this video longer because that's it. There's really no need. I wanted it to be short, but it was 18 minutes. Fuck. Well, whatever. I hope you guys enjoyed it. Let me know your thoughts in the comments below. We'll do some more videos like this. If you want to learn about Fib Retracements, I highly suggest that you either check out the courses on our website below, or you can always check on YouTube for stuff too. But if you want to learn exactly how we use them here, at Simba'S and myself with Fong. Fong teaches that class. It's sick. It's in the description below. But that's it. Hope you guys enjoyed. Have a great week. Merry Christmas, and keep printing. Peace.